New data has emerged in Bitcoin that has changed the technical map. Its $70,000 range target has now been neutralized and is no longer in play. This proves the importance of staying flexible and adaptable. Luckily for us, we are way ahead of the curve. In a recent episode, we discussed how Bitcoin was likely to shoot up towards the 70k range and how that range on its own would amount to a significant resistance level. I'm sorry to say that that window has now been closed as Bitcoin blew its chance. And as any technical analysis is based on data available up to any given point, new data can emerge to alter and change the overall technical map. And whenever that happens, the odds change in turn. A fundamental prerequisite in order to become successful at trading is therefore your level of objective adaptability. For technical analysis is not at all about making up your mind and sticking with it. It's the very opposite. It's about detecting, understanding, and going with the flow. For wherever that flow decides to go, that's where the profits stand to be made. For the market will trick you and feint you until it ultimately settles with a move. And that's why we want to stay around for the last dance. This is all equivalent to the turn and river cards in poker that can rapidly flip your hand from sugar sweet to sour or from utter junk to pure joy. With that said, Bitcoin hasn't necessarily changed the outlook for a northbound outbreak per se, it's just lowered its targets. Still, I do recommend you to watch the previous Bitcoin analysis episode for full context in this one. But first, nothing in this episode is financial advice. These are my own conclusions only, and everything I say should be taken at entertainment value. And if you like this episode and if it helps you better understand the ever-changing technical roadmap, then please hit the like and subscribe buttons and share this content with others who may benefit from hearing this too. Let's now bring out our surgeon's knife to dissect whatever is going on within Bitcoin. Let me begin by clarifying something. Bitcoin's primary trend is still inherently bullish and intact. There is no doubt at all that the way ahead throughout this markup is up, so no need to worry there. The thing we're about to distinguish is rather whether that cooling off that we talked about will come now or after a pump. For a cooling is coming, whether it materializes as a temporary price correction or as a time-based correction. The difficult part, however, and which we will look into in this episode, is how and why that 70k range target and resistance has now been neutralized and how that changes the entire technical map. Now, amidst the previous analysis, Bitcoin showed clear tendencies of being ready for a northbound outbreak. It was a scenario that was both highly likely and one that made perfect technical sense. We're talking a final release of bullish energy towards the diagonal resistance prior to a significant correction that would both shake out yumpy investors and greatly cool off the monthly RSI, which is still overdue. And on top of that, it would establish a more sound-looking primary trend line. For whatever we have now, not sustainable. But this 70k range breakout scenario was time sensitive as diagonal resistances move quickly by nature. And since Bitcoin failed to move up, that very window for a diagonal resistance has now been shut. Now, this changes the technical picture and moreover neutralizes the 70k range resistance. It's therefore important that we reassess the situation and objectively redetermine the technical evolvement so that we are spared from surprises. In this sense, if we were to get a breakout soon, which is still just as likely as it was 2-3 weeks ago, the targets for such an outbreak and the likely reversal points before a temporary crash will be altered. So what then are the likely outcomes from now on, given that Bitcoin missed the first boat? Well, it's almost as good, it's just different. Here's what I see, and mind you, any technical analysis you may come across, whether on this channel or from somebody else, is always subject to future updates and alterations if the price decides to take another route, which it can do at any given point. For technical analysis is based on probabilities, and those probabilities constantly change. But that's where experience comes in, and I host no doubt whatsoever that we'll be able to spot and identify any such alterations and detours early on. What we see here is not a top per se, it's a formation in the making. Whether that formation is an ascending channel or a rising wedge doesn't really make much of a difference, for the outcome will statistically be similar. Let's begin by looking at them individually. This rising wedge is technically confirmed as it's now got 3 touches. Normally, rising wedges are bearish formations from which we statistically see southbound breakouts. In Bitcoin, however, rising wedges typically counter the laws of gravity as they very often tend to break upwards. At least historically. But, and this is not meant to confuse you, even though I can see why it might do so at first glance, this time is different. For this time, Bitcoin is expected to break out downwards. So to deconfuse you, or unconfuse you, whatever it's called, crap, this is getting confusing to me too now. To set things in order, rising wedges are bearish by nature. Bitcoin typically defies that, but this time around it's strongly bound to follow the technical laws of nature and break down. But why is that then? Well, I'm glad you asked. The monthly RSI is still very much like an overstretched rubber band just waiting to snatch. It's way high as it is, and any break above this rising wedge would pull Bitcoin into absurd land. And mind you, that's a massively unfriendly and dangerous territory where we want no business whatsoever for our money and investments. For the thing is this, the statistically expected outbreak for this rising wedge is around the 20th of April, plus minus of course, to still qualify within the first standard deviation. This means any northbound outbreak would likely be a fake out, at which the downward movement would be violent. Secondly, any such outbreak would not only leave us with very little upside and a huge downside, it would leave us with a brutally steep downside. And as trading all comes down to probabilities and odds, those are certainly not the times you want to put your money at work in longs. So for this confirmed rising wedge to be technically ideal, the only thing missing would be for a third touch on the upper resistance. This is by no means needed, although the price will be naturally drawn towards it. In this case, we're talking prices in the late 60k range, not counting any temporary wicks. The technical target on the other hand, and this is where things really come together in the most beautiful fashion. The technical target is right at the previous pivot high at $42,000. Ladies and gentlemen, technical analysis doesn't come together any more beautifully than this. This is the most likely outcome on the technical map. Let's now sit back and see what happens. Let's now take a look at the other side of the coin. Could we break out already? Sure, absolutely, we could. However, it would be a premature outbreak, which would be statistically unlikely. And add to the equation the EMA 50 on the daily, the EMA ribbons, the green Ichimoku, and some strong horizontal support levels, and they rather tell us that we need power and momentum to break through them all. And what better way to do so but to make a third resistance test on this rising wedge formation and to stretch the monthly RSI to the breaking point. That's the stretch and the snatch that can snap us all the way down to the 40k level. Again, plus minus. And the best part is that this would be perceived as scary and bearish to any unassuming Bitcoin investors. It would reset the sentiment to bearish, which would be the perfect spot to keep on going. In fact, I say this would be the ideal scenario from now on for a long-term sustainable trend. For what will practically happen in any such unfolding is this, just as discussed in detail in the previous Bitcoin analysis. 1. We will get a sound-looking and sustainable primary trend line. 2. The monthly RSI will greatly recharge. It will take a well-needed vacation from being overworked and will come back nicely rested and ready to take us higher. And 3. Any establishing over 42,000 at lowest will not touch or breach the previous pivot top. Historically, Bitcoin has never done this amidst any markup, and this is one of the key ingredients for its strong upwards momentum. This here would be the golden low-risk, high-return spot to buy like a freaking maniac, especially considering that the price would then test the EMA 200 on the daily, and any such outcome would be a no-brainer in my book. Let's quickly move on to the ascending channel prospect. Like I said, there's no real difference in outcome between the two. The only thing that sets them apart is that a channel provides us with no timing expectations when it comes to breakouts. It could happen at any time, which naturally makes it harder to predict and hence impossible to know where the ultimate price target is on forehand. We will only know the technical targets once the outbreak takes place, compared to the rising wedge in which we already know in advance where the statistical outbreak is due. This goes for resistance targets as well, for if this were to be a confirmed ascending channel rather than a rising wedge, then the ultimate target resistance is higher as it can occur further into the future. And any such test in late April would push the resistance into the 70,000s. However, we cannot realistically expect this potential channel to last any longer than early May. Any stretch beyond that would make it look technically absurd and turn it into a channel outlier. The only thing that keeps the ascending channel in transit is the very fact it hasn't yet been technically confirmed, for we only have 2 touches respectively, which is no good to us. In this sense, and until proven otherwise, the rising wedge is the force in play. This on its own is a good thing, for if we compare the two, the rising wedge provides us with more reliability. The only thing to keep in mind with this approach is this. If or when we were to get a wedge outbreak downwards, we need to keep an eye on the channel support. For if the price finds support and bounces, it may very well disqualify the wedge itself. It may make things difficult in the short term, but if it does, we'll dive right into it. The only thing that strongly favors a southbound wedge outbreak already is the recent upward bearish blue closing on the daily. This isn't necessarily a cause of concern to me, it just tells me that we may have that cooling off effect prematurely. If I could choose personally, however, I'd take the northbound outbreak, at which I'd release a solid portion of my position at the resistance. This would leave me in a much appreciated spot to buy back with the very same money but at much discounted prices. If we were to get a southbound breakout already, both from the wedge and the still tentative channel, it just means we're getting that cooling off right now. This would be a sign of health, and the only alteration I may make in such case is to sell off some marathon in exchange for Bitcoin. And those marathons will then be re-added at Bitcoin support zone at $42,000 to $44,000. So to sum it up, the ideal and most likely spot for Bitcoin would be for it to hit its upper resistance on the rising wedge, and to hit it relatively soon. That's where I'll get rid of most of my holdings in a strong statistical anticipation of a steep and temporary plunge, at which I'll buy back everything again. That was all for now. Thank you and goodbye.